Welcome traders to this short video on a really powerful indicator called the MACD. Before we talk about how to get the MACD on the chart and what it actually entails, let me just define MACD. Something else than moving average, convergence, divergence. So a lot of people throw this acronym around, and I was hoping to give you a clear explanation of what it is. It is available in MetaTrader 4. Let me just first show you how to find it, and let me also then explain how the different settings work. You go to Insert, Indicators, Oscillators, MACD, and by the click of a button it is available for the chart. First, you have different parameters. We have a fast EMA that's set to 12, a slow EMA that is set to 26, and an MACD SMA that is set to 9. So what does that actually mean? So the MACD is calculated by subtracting 26 exponential moving average from a 12-day exponential moving average. And a 9-day EMA of the MACD is the so-called signal line. Right? And we give that signal line a different color. We put it here into a pink or red color, and we show the MACD in a gray and also in a reddish color. I also made sure that I make the lines a little bit thicker to make sure that you can see them. What's interesting about the MACD is that it's getting plotted not above the price, it's getting plotted in a separate window. We're looking for three main patterns or scenarios with the MACD. One would be a crossover when the MACD falls below the signal line. You can see that line here going up and down, a red line, and when we have this MACD area, you can see the settings there again, 12, 26, and 9. If it falls below the signal line, it's a bearish signal, which indicates that it may is time to sell. On the other side, obviously that would be a potential time to buy if the price gets some upward momentum. Many traders wait for a confirmed cross above the signal line before they're entering into a position to avoid getting faked out. You know what looks quite easy in hindsight, a crossover here, when you are in the trade in that moment, it looks actually quite different. So that's one way of looking at the MACD. The second way to look at it is to look for divergence, and you can see this downward trend here. I just draw a simple trend line here to give you an idea of the direction of the market. And you can also see when you look at the MACD that is actually, oops, I was looking for this. When you draw a trend line here, you can see actually that something is happening that we call divergence. While the market is trending down, the MACD is indicating that that downward move is starting to get exhausted, and traders will start looking for potential buy opportunities. And finally, kind of a first scenario would be a so-called dramatic rise. When the MACD goes up dramatically, that is the shorter moving average pulls away from the longer term moving average. It's a signal that the financial instrument is overbought, and again, people are looking then for maybe for selling opportunities. People who use MACD also would tell you that you want to use it probably not just in isolation, but you maybe want to combine it with another indicator. A typical example here would be the relative strength indicator or the RSI. So hopefully that has given you a short overview of how the MACD works, what it means, what the different settings are, and again what we're looking for is the three scenarios: one, crossovers, second, divergence, and thirdly the dramatic rise. Good luck with your trading, and I hope you can see you again in another video where we will discuss another set of interesting indicators. Thank you very much.